Hello and welcome. This is the Market Wrap. I'm Agam Vakil, and it is the final expiry of 2018. What we've really seen is a positive one, considering about a 0.5% gain for the Nifty at this point in time, and it is just short of the 10,800 mark, even though we did see the Nifty move in and out of that level through the course of the day. Now, among the gainers, we do have something like a Tech Mahindra and ONGC and Reliance Industries along with Infosys, which have advanced. It will essentially be because of these two heavyweights that we have seen advances on the Nifty. On the losing end, however, Tata Motors continues to be under pressure, followed by Hero MotoCorp, Tata Steel and Dr. Reddy's Laboratories. Moving on to your broader markets, it's largely 3 gainers for 2 losers, at least as far as the NSE 500 is concerned. And we have the likes of something like a Central Bank of India advancing by around 6.3%. ICICI Lombard also advancing. In fact, a bunch of PSU banks which are up and about in trade today. KNR Constructions, of course, from the construction sectors, also gaining in trade, and we've also seen ILFS Transportation locked in upper circuit of around 5%. Future Retail, on the other hand, is under pressure, and we will talk about that in a little more detail in a bit. DCM Shriram also down 4.7%, followed by Brigade Enterprises, which was actually advancing by, had advanced by as much as 13-14% yesterday. Gathri Projects, Emphasis and SJVN, among other stocks, which are losing out in trade. But at least as far as the advance decline ratio on the NSE 500 is concerned, well, that looked favorable. But that wasn't the case when it comes to the National Stock Exchange. Let's bring in our markets editor, Neeraj Shah, for his perspective and how he's reading the markets. Neeraj?
Well, difficult. I think it's in line with what happened yesterday as well. Europe didn't quite open. What I mean is a bit of an unpredictable movement, slightly volatile as well. Europe didn't open as strongly as maybe a few people would have thought, but crude falling the last 45 minutes of our trade time, maybe that helps the market a little bit in tomorrow's session as well. But must say we ended quite well for a month which was terrible for the US markets. I think the last few days have been pretty good for the Indian markets as well. Keep in mind the Dow futures were firmly in the red when we shut shop, and if indeed they stay lower, then there could be a little bit of pressure point on our market as well tomorrow morning. But aside of that, some laggards coming back, IT doing reasonably okay for itself. Concern probably might be what's happening to some of the large banks. If they continue to stay soft, the yes banks, HDFC banks of the world and HDFCs of the world, and there might be a small bit of issue. But tomorrow promises to be low volume day as well, Agam, the first day of the new series. Doubt that will have really big fireworks as well. So let's wait and watch. For now, steady as she goes.
Absolutely. Neeraj, thank you for joining us and getting us a perspective. But what about the technicals here? Let's get in technical expert Rahul Randeria to take us through his views. Rahul, the Nifty closing at around 10,800, around just below that. What's your view here and what levels are you watching?
Yeah, as we discussed earlier, that the setup on the yearly chart, it has been moving, that it has formed a high wave candle. In 2016 also, it has formed a high wave candle where the yearly close was flat to positive. And in the 2017, we have seen a very significant rally. It was a maybe rally of from 8,000 to 10,500. Similar pattern has also formed in 2018. It is a high wave candle. So preempting that move, I am expecting a very big move in 2019. But definitely looking at the general election in May, it would be highly volatile. But definitely at lower levels, we would find the support at the lower levels, where we have seen, the frontline stocks are available at the very good levels.
Sure.
So definitely we could find lower level support on every dips on indices. And long-term chart, if I feel that, and I'm preempting a move in next maybe 18 to 24 months, I'm expecting Nifty to test the levels of 13,516.
Okay.
If we take out, if we take the point from 10,760, which was 11,760, which was the yearly high, from the lows of 10,004. So definitely 1,700 and something points, which Nifty has lost. So definitely if we add on to 11,760, the target comes to 13,516.
Okay.
So maybe in 18 to 24 months that target would be achieved. So at lower levels one should buy, and the portfolio investors or long-term investors start buying, chip in slow and gradual move and take that opportunity to build a long-term portfolio for long-term investments.
Rahul, I'm sure anyone out there who's bullish on the markets would be salivating at the fact and the prospects of the Nifty moving above 13,000. But what about the Bank Nifty? What levels are you watching there?
Yeah, similar pattern on the yearly candle. Bank Nifty has also formed a high wave candle. Then we have seen an, maybe 7,000 points of rally in 2016.
Okay.
Again, this year has been a flat to positive with a high wave candle. So we could expect a very big move in coming years. So definitely maybe 3,000-5,000 points of rally we could see. But as I said that we have general election in May, so we could see highly volatile moves. Absolutely. But again, definitely at lower levels we could find support. And in that context, we have also discussed that the US market is bottoming out, and bear market are not short while. Those are the bear markets are the markets where it takes long time. So definitely in the last 15 to 16 days, we have seen the Dow Jones also falling very sharply.
Sure.
Yesterday, I feel that the bottom is around in the Dow also.
Right.
So in coming 8 to maybe 12 months, Dow can rally from the current level, which is just around say 22,000.
Right.
I'm expecting it to test the levels of 25,000 to 26,000 in the longer period of time. So definitely. Right. In long term or in coming days, we could see Indian markets aligning with the Dow, because as of now in the last 10 to 15 days it was decoupled, but now I feel that again it could realign and would start in tandem.
Right, Rahul, thank you for joining us and taking us through your views on the markets and the levels that we can watch out for. But with that, we shift focus to perhaps a few stocks, and right at the top we have PFC, which is in focus this time around. Yatin, what do you have for us?
Today, Power Finance Corp, that stock was as high as 5% intraday, ended almost flat. Today they informed the stock exchanges that they have the requisite approvals to acquire government's stake in REC. So basically, PFC would be making REC their subsidiary after the acquisition. Now, important comments coming in as far as the press release is concerned, wherein they mentioned to the stock exchanges that the capital adequacy ratio for PFC would not change, and they will try to keep it at the pre-deal levels, and that is something important that the markets will be watching out for. Capital adequacy ratio is something which is required by the Reserve Bank of India to keep aside, when it comes to the NBFC and the risk management. Also, more importantly, they said that they will fund the REC stake acquisition from the Government of India via internal accruals and debt, and they hope to retain their credit rating to similar levels post the transaction. So the markets are watching out for a couple of things. Number one is how really does the transaction takes place, because the management has guided for 31st March as the probable date. Before that, they would like to complete the transaction. Number two would be the capital adequacy ratio. How does it shape up post the deal? And number three would be if there is any credit rating downgrade, given the fact that a bulk portion of this funding would be done via debt, according to analysts. So, these are 3-4 factors which will clearly, impact PFC moving forward. But let's see how really does the transaction close, given the fact that the valuation for REC stake is not yet finalized.
Right. Yatin, thank you for joining us and getting us those details. So watch out for PFC, but there are a bunch of other stocks which are also in focus today. And we have Sharad Dubey, as usual, who is going to give us that list. Sharad?
Yes, Agam. The first stock I've picked up is Celan Exploration Technology. The stock went up almost 12% today and ended at around 10% high. These are levels we've seen highest level since November 14. So this is based on the news that the board has approved a buyback plan of around rupees 300 per share, with the buyback amount aggregating to around 25 odd crore rupees, and the price is almost to 50% or more than its issue price. Apart from this, the company also has given an interim dividend of around 5 rupees per share. The second stock I picked up is Future Retail, where the stock has taken a knock by almost ending the day at almost down by almost 5.6 odd %. This is the lowest levels seen in the past 2 weeks, and it is also trading below its 200-day moving average of around 538 odd rupees. Today, earlier in the morning, Economics Times did report that the company's Biani family office is actually going to reduce its debt by raising around 3,000 crore rupees. But the company also said that the listed companies won't be affected. So we'll see what can happen next. The third stock, Agam, if we can see.
It's here, it's right here. So
yes, so it's Suven Life Sciences over here. The stock did manage to do well around 130 odd, and then it ended at around 2% high. This is based on the news that it had secured 2 product patents for its Brazil and Eurasia plants. So basically they'll be getting 2 licenses, and both of these licenses will be valid for the Brazil plant at around to 2023, and for the Eurasian plant it will be till 2034. So these patents will be used to treat your neurodegenerative diseases. So these are the 3 stocks, Agam, which are moving in the mid-cap space.
Thanks, Sharad, for bringing us that list of stocks which have also been buzzing in trade today on the back of news. But well, we're done with expiry now. Just a handful of sessions left before we move into the new year. There is going to be lots more lined up in general, but I think markets, at least as far technical analysts are suggesting, are going to take a breather over the next few days. But well, until then, we're going to have to wait and watch as to how these things pan out. And with that, it's a wrap on the markets, but lots more lined up, so stay tuned to Bloomberg.